Thank you, WinPE, for having me here. Yes, I have been investing for the last 20 years out of my 30 years of work experience. So it's been quite a journey. And the fascinating thing about investing in India is that since the turn of the decade, since 2001, India has been changing every 3 to 4 years. This is because of the growth in the GDP that is happening, the deepening of sectors. So, every time I think I am now experienced and I have the requisite knowledge to invest in India, there's a new challenge that comes up. There's new sectors that are coming up, technology and technology applications being one such example. And so you're always on the treadmill, you're always learning in a country like India, which is both fascinating as well as sometimes exasperating, right? Because you think at the age of 55 you should be in cruise control, but that is a assumption that you should not be making, because India needs a constant vigilance from the developments that happen in across industries, right? So if you look at take the easiest one, the consumer sector, whether it is enabling the retailer to purchase on the app, whether it is payment technology, whether it is lending tech. I started my career in ICICI Venture in 2001, when the biggest and the most exciting story was organized retailing, right? The heroes were Shopper Stop and Pantaloon and etc., which was lucky to be on the board, and I saw their IPOs as well. So from there, you're now talking about a totally different sector, a totally different consumer, and that is the most fascinating aspect of investing in India. In 2008, when I started with NEA, and I was sitting in a GP meeting, the very first GP meeting, the first deal that was being discussed was Cloudflare, and I was just thinking to myself, when is India going to get these kind of deals? And it was really fascinating to juxtaposition the India story with the US story, because it keeps telling us how different we are and how different we will continue to be, even as we grow in the next decade. This actually is an excellent question, because this. If I were to be very honest, this is what keeps me awake most of the night. Let me start with my journey with technology. The reason I joined NEA was because NEA is a global leader in enterprise technology investing. So whether you take Juniper, whether you take Data Domain, whether you take Aerospike, you name the enterprise technology, and NEA has been one of the significant investors in that play, including Robinhood, the latest controversial trading technology that is going around the news blogs today. So that was actually my biggest motivation, knowing fully well that in India, we will be applying the technology not as much as investing behind original IP-based technology development companies, right? So the 8 years with NEA that I had really helped me devise a methodology to keep in touch with what's happening in the US, but at the same time develop a framework by which we can invest or invest into companies that are applying those technologies in a meaningful way in India. The way a cloud technology is being applied in India is very different from say, a US or a China market. So therefore, what needs to be done as an investor, I believe, is that you need to keep yourself updated on what are the technologies that are emerging. So, for example, quantum computing, how is it going to affect the end markets, or how is it going to affect technologies? How easy is the adoption? And various factors. You have to know only the basics. You have to know what you don't know and be very humble about it, and just work with experts and work with that expert to basically make sure that you are going up the learning curve on technology. There is nothing like in consumer, you can instinctively know whether this is going to work or not because you are part of the market. But in technology, it's a much tougher call, but that is what makes it exciting. This question in the context of India is brilliant. I must say that because very often when we do cut, copy, paste from US or China, uh, the investments falter, right? Because what is different about India is that the rate of adoption of technology is uh, very different from these countries. A, B, it depends on how complicated is the technology. What is the what is the price at which that is being retailed at? There is a lot of things that need to be looked at from a purchasing power capacity of especially the corporates and I'm talking specifically about B2B enterprise tech plays. That is really the largest challenge that I see, that there is a drag factor in our country. There is a friction from rapid market adoption perspective, where we really look at it as, how large is the and deep is the market that this company is addressing. Who's the decision maker? That's a very interesting dynamic in enterprise tech plays. If it is a CEO or a CIO who's going to decide whether your company's product is going to be bought, we are very excited about it. If it is going to be somewhere way down below in terms of hierarchy, who's going to be the decision maker, or he's going to be the meeting taker, and then it is going to get escalated to the CXO level, that is a big challenge in India because ability to understand technology also is a factor that creates that friction. So we take that, but most important, the risk return optimization comes from the entry and exit valuation decision, right? In if you take again the US example in enterprise technology, that country is a gold standard. So if you look at some of the B2B tech plays and their valuation, we have seen ranges of 10 times, 30 times uh, price revenue multiple, which is something that people have actually made tons of money on. It's very similar today as with consumer tech plays from the returns that enterprise tech is making. But in India, because of the friction factors that I was talking about, because of the fact that these companies are creating a market and are not necessarily going to see very rapid scale, there is a bit of caution that we must exercise while fixing the entry valuation multiple, because we are not sure yet how many investors would understand their product and would be willing to pay the 10, 12, 15, whatever, pick your number. The pyramid in the case of enterprise tech is very, very sharp. There are only one or two companies that break out in terms of multiples and get that valuation. So it is finally comes down to whether you are pricing the asset right in terms of its ability to scale, the ability to differentiate itself from competition, and of course the valuation. So it's not very different. The only thing is that from regular investing, the only thing is that it is hard to judge what would be the size and scale of enterprise tech in our country. Absolutely, yes. I am what I am truly excited about in this phase of my investing career is the kind of entrepreneurs that we are seeing in our country today. Really bright young talent, people who are subject matter experts. I just recently met a entrepreneur in the logistics space. Uh, comes from a very humble background, but brilliant clarity, brilliant thought process. The clarity that these young entrepreneurs are bringing to the table is something that I truly, truly treasure as an investor. It's not the usual kind of saying that, I'm smart, I'm bright, I know India, I will deliver, and completely ignore what the competition is doing. We saw a lot of that in the late 2009, 2010 era, where, if you knew half of the tea of technology, you would be the brightest star in that sector, and you would, basically have the attitude that competition is useless. That behavior of being more attuned to the environment, and competition is part of the environment. So that is what is one big change that I'm seeing from the on behalf of the entrepreneurs. On behalf of the investors, I think what is happening is that our food chain is getting more and more developed. Today, if I were to invest, I would definitely prefer to go to the VCs or the angel and seed investors, look at their portfolio and say that, hey, I like this company and I like you as a co-investor, so I would like to invest in this deal. So what was happening earlier was our market was very siloed and very patchy. So the VCs did what they did. We would be doing our own thing because we have a great proprietary deal flow. There are enough mid-market companies in our country that need capital, even if they have not taken the first institutional capital. And the PEs were chasing buyouts, and they were not necessarily doing a lot of secondary sales. All of that has changed. So if you see, we just did a great exit. We sold. We have 3 exits in during the pandemic. To be honest, it was extremely exciting. It was very telling because the two of them were PE led. So essentially, what is happening in our industry is that there is a history of institutional capital, whether VC or growth equity funds like ours. There is a certain base level of trust that is got built up in our system, and that is actually extremely good for our industry. This is how US thrives. This is how China thrives. Finally, I think our industry is getting into this game where we are saying that if India as an investment destination has to deliver, we all have to be part of a cohesive pie. The first thing that I alluded to earlier is clarity of purpose, right? I think, what are you seeking to create? Because if you know your subject matter, you know the market, and you know what you want to create, that bricklayer of clarity is the best thing that you can do to yourself, because that also finally helps you raise capital from investors. The investors are looking to you to articulate what is it that you are trying to create and why is this going to win. So the clarity of purpose is something that I always look for from entrepreneurs. The second thing that I look for, it is so important, I have to repeat it, is how do they deal with people, right? The ability to attract talent, the ability to retain talent, and the ability to understand what competencies are missing from first yourself as an entrepreneur and from your in your team is actually the make or break, because you may have clarity of purpose, you may have a great idea, but if you do not have people that can help you execute it, it's going to be disastrous. I don't think Indians are good at this. So the positive news is that yes, it is definitely changing. People are understanding the importance of good people, but it is always, only in the critical roles. So tomorrow, if one of my companies is offered a tech person, let's say, he will, not hesitate at a great tech talent. I don't care if he wants $500,000, but I want the tech talent. But there tends to be a sort of a um, I know it all, I can do it all kind of an attitude. And therefore, uh, when you should be hiring great people at the CXO level, in both finance as well as, say, go to market or marketing. Um, India doesn't really get it. I mean, Indian entrepreneurs really don't get it. So there are times when we have walked away from the deal because we say, this is not going to go anywhere just because the people factor is missing. And the third one is all about timeliness, right? I think many battles have been won on timeliness, and many battles have been lost in timeliness. By timeliness, I mean, when do you launch your product? When do you raise capital? When do you hire people? When are you planning your exit, for example, for your investors? You can I can write tomes about how timeliness has destroyed companies. It's don't the axiom that don't try to get it right to the extent of 100%, even if it is 90%. Don't miss the timeline, because time can help you achieve a lot of things. We have two companies in which the co-founders are women. I have seen a lot more deals than I've ever had where woman is a tech entrepreneur. We didn't quite invest in it, but uh, I think it is a simple question of the funnel, right? If you look at it, who are the tech entrepreneurs? Where do they come out from in India specifically? It is your people who are IIT or done their engineering, who have worked for Amazon, who have worked for Google, who have worked for TCS. They are the ones who team up and say that, with either the colleagues or their college mates, and say that, let's become entrepreneurs, or let's start this company. Once you become an entrepreneur, I haven't seen them being hesitant or having an issue about being an entrepreneur, or even the favorite panel topic is, are women averse to risk? I don't think so. Not in young India at all. If you look at the intake ratio, the management schools have definitely improved, but not engineering. I would think that as initiatives like WinPE start going to colleges and start uh, working their magic, it will definitely change over time. But it is going to take time. It's not going to happen in a hurry, because you're going way back into the chain from a supply perspective. So I will be honest, I did not face any barriers, but what I did face was perception issues, right? Um, so I moved from being from an operating role to becoming an investor in ICC Venture, and everybody was questioning whether I will make it as an investor, and that is not necessarily because of my gender, but I did think at that time that the gender played some role. But overall, it's always, she's joined NEA. Will she, make it as a GP there? She started Megadelta. Will she, be able to set up the firm? Is she, it's always been very subtle, but it's not, nobody came to me and, criticized me. But I honestly, it's not a barrier, as I was saying. It's not even something that you want to be even thinking about often. But it has happened. I should say I'm singularly lucky that it was not an issue in my career. So I think yes, of course, the funnel applies here as well, which you as a team are far more aware than even I am. If you look at the underlying industry dynamics of the investing industry, what is it that is required? Right, the first thing that is required is that um, that LPs, our investors, look for continuity. So if you have a GP team, you are essentially talking about being part of Fund 1, being part of Fund 2 and Fund 3, there is really no dynamic changes that happens to team, and that because that is what is expected and desired by our investors. The number of investors that come and say that we'll come in Fund 2 because we want to see how you do the Fund 1 and come back in Fund 2. So I would say that that is one large requirement that acts as a constraint, because you're not seeing positions opening up as much as you ought to. The second thing is also the industry requires team continuity and cohesiveness, right? So let's say you were working for a consumer company with people leaving, with people turnover, posts open up, but that's not true of our industry. The number of jobs the number of posts itself, the number of people perform itself is small. And then you have this longevity of doing this business. Then you have the continuity of team and team cohesiveness. And last but not the least, this is where the lateral hiring does not happen at the partner level. So we have, of course, looked at doing some lateral hiring, but it doesn't work out because the incumbent team needs to be rewarded for continuity. So you tend to basically hire at the analyst level and the associate level, where again there is a funnel issue that comes about. So if you were to then say that if the supply of jobs are not that high, how do we really infuse women into the industry? I also was part of a very large forum that talked about the issues that faced by women investors, and I was actually thinking that it would be a nice cocktail evening, and we'll all be happy and exchange cards and go home. But I was surprised that there were issues that came up. There's a lot of manspeak that happens. There's a lot of worry about work-life balance. That is, if you're starting a family, is it held against you? Is there, there were issues of not making it to the highest levels, whether partner or general partner, because you were preferred, somebody else was preferred over you. So there are definitely issues even once you're into the investing world, which leads to higher exits, right? So your intake is not that high, and there are obvious exits that happen. So you don't have a stable industry structure to support a very drastic change in the women ratio in our country. I'd say cloud computing, because I think there's a lot happening across data, a lot happening across AI, but the way technology is delivered has completely changed because of cloud, and I think that is it has made technology much more accessible to every corporate. The biggest change that will happen is quantum computing. We are underestimating the speed and the availability of technology because of quantum computing. In as much as internet was a game changer for the consumer, quantum computing will be the game changer for every tech purveyor, right? Whether you are into data analysis and AI or machine learning, going to change the basic fabric of computing. It's Sanjeev Bikhchandani of InfoEdge, today an $8 billion company. I joined the board when it was about 2 crores of revenue. So I continue to be on the board. Vada Pav, Mumbaikar, Zindabad. So I dive into topics which are completely unrelated to work. So I love reading, watching YouTube on astronomy, astrology, anything that catches my fancy for the moment. I got on to understanding lots of things just by reading and watching. Earlier, I used to read voraciously, but of late, it's been a lot more digital, whether it's YouTube or the net. I like to pick a topic and just dive in deep and understand it more. A tech entrepreneur. That was an easy one. I keep wishing that I had, my first, when I graduated from B school, my first offer was into a tech company. I That was in the 90s, and I didn't take that up. And I always wonder if I had gone down that path, what would have happened.